Hey, good morning, all. Good evening. Good morning. Welcome to Bro Billionaire. This is Raghu. Today, what we are going to learn now, there are very important things which I'm teaching you guys. If you follow all the videos on our YouTube channel, they are the knowledge base and knowledge transfer. You can call them as KT because when you combine everything, you have a solid course. Now, if I'm going to make longer videos, nobody is going to watch. So in a bite-sized information, I'm providing you a complete set of course where you can master trading. Let it be Forex, let it be crypto, let it be index, let it be stock market. It's the same thing. Today, we will be learning the importance of swing high and swing low. A lot of times you might have heard about the trend reversal, support and resistance. I have provided you supply and demand. Now you need to connect to this, to that particular, videos. Now, when we are trading on shorter time frame, 5 minutes or 15 minutes time frame, now how to identify the trend reversal? Now, there is one very important video using RSI. Now we'll be using RSI, but there is also little more subjectivity to it where you can identify it whether market is going to go down or not while you take the trade. Now, what happens? What I'm talking about is market usually comes this way. Now, when it comes this way, all of a sudden it can start going this way. When it starts moving up, market will not reverse. It may consolidate and try to move up, right? The last swing high in any market usually acts as a resistance for upward movement. Remember, in a downtrend, the last swing high. When price should, the logic is simple. If buyers, or sorry, if sellers are waiting to sell, they will try to push the market near the last swing high. That's a very important level. Now, after that, market can reverse the trend. This is a general assumption. Understand, this is a general assumption with a high probability, which I'm going to show you now. Now, likewise, if you're going in an uptrend, market is moving in an uptrend. Now, the last swing low, now this is where market will try to defend, which means buyers will not allow the last swing low to be broken on whatever time frame you are trading, 1 minute, 2 minutes, 5 minutes. This is the general trading assumption, price action assumption. Clear? In downtrend, the last swing high. In uptrend, the last swing low. That's all. Clear? I'm not going to waste your time. Let's quickly go ahead. This is our floor pivots. Okay, I want to go to candle pivots. I have 5 and 15 minutes. We have candle pivots along with previous day high low, previous month, previous week high low. Now consider this. Now market is, first we'll go with this one. We'll take the recent example. This is the uptrend, 5 minutes uptrend, right? So market is here. This is where I'm going to just make it a little big if you're not able to see it so that you can watch it, watch the 15 minutes. Right? Makes sense? Market is in one trend upside. So our trading time frame is 5 minutes. This is what I trade. So market goes one swing. See here, I'm going to show it for you. One swing. This is gap, one giant swing. This is how it works. Got it? Now here, what is the last swing? The last swing is in an uptrend. So this is the uptrend. Wherever it goes, suppose here, this will be the last swing. If market is here, this will be the last swing. Now we are at here. Market gave, you see this price rejection bar. Now this is our last swing, which is near R6 pivot, right? Now this level will be defended by the buyers if trend is very, very high. That is how market works. So if this level is broken, you need to consider market is going downside. Understood? Simple enough. See, watch here. I'm going to show you an example. Market comes here, goes up, comes. This is the last swing. Now see what happened near the last swing. Try to go up, comes up. This is a double top. This is a triple top. But this last swing was defended, and then market went up, again went sideways. Try to come down before the last swing near 20 SMA, it went upside. Now, this is the general notion. There are very good examples. Just hold on, I will show you. Now, in this last swing now, when market is in sideway, you know that there is no swing. You will be able to easily understand this is an uptrend or downtrend. So Friday market was in downtrend. Let's see here. This is the downtrend, right? Market is in downtrend because of gap down. You have two higher, lower highs and lower lows. See here, one lower high, second lower high, third lower high. Lower lows, lower lows, lower lows. Now here market has come. Now when in a gap down or gap up, usually we need to consider this, the top, the first 5 minutes candle high or low as the swing high or swing low. This should be your assumption here. Understood? Now here, if market is going up, if this level should be broken for us to take counter trades where market can move up. In no way I'm asking you, you should not take trade at the bottom, but I'm telling you now this will help you to understand if market can break out and move in a trend, or you need to go for scalping or 1:1 trades. Now this is where this information, this knowledge will help you. Now market came, this is one swing. Now this became a last swing, right? Slow, very small, but slow. Now this swing is taken out. Now this will be your opportunity to enter the trade because this is the last swing. See here it comes, tries to go up, faces a resistance near S4, comes down. Unfortunately, after breaking out, it had double top. In double top, 65% of the time fails. So it was a high probability to go down. This is how we need to understand. Now, once market went down, now consider this is the downtrend. After this swing, this becomes the last swing. Now, if you have to go upside, this double top where market face resistance should be taken out. And then it comes down, another swing, another swing. Now here, when price is going down, whatever the last swing is, this swing, then this swing, then this swing. Now here, what happens is you have one higher low, second higher low, third higher low, fourth higher low. Now this is where the last swing is. After this is broken, you can consider price is going to go up. This level should be considered as the support. Now for better understanding, now this was a sideway, you can see, but wherever you see two higher highs, higher lows, you need to understand market is in trend. See here also, this is not trend, this is sideway. I'm talking about breakout. This is also sideway. Now watch here, sharp fall, market is falling, right? Market is falling down. When it is falling down, start marking the swing highs. Falling down, a pullback, a pullback. So whatever is the last swing, see this swing, watch here. This was the last swing where price went down, this area, right? This area. Then price comes down, another test. This is the last swing, same area market is going down. One swing. Now here we have engulfing candle. This small reversal candle you can consider as a swing. It's a narrow fall, but near this area, you get resistance, price goes up. So you don't have any, how do you know that trend is going to reverse in a strong trend? Along with RSI, you need to identify this, right? There was one date where price reversed sharply. When was that? I think recently, right? Last Thursday. Yeah, here. So it is sideway. What is the last swing guy in a sideway? This is the last swing guy. Now this swing guy is broken. Market is in uptrend. That is the general understanding you need to understand. Now here, watch. The last swing low was this, right? This is 23rd. 23rd. Watch here. At the same level, watch the RSI. From overbought zone, the RSI comes below 60, where market just goes down. So what is the catch? How do you understand it? Not just RSI alone, but along with RSI, the last swing high. Watch here, I'll show you. Price goes up, one swing goes up. This is the last swing. Usually market should defend here. Once this level is broken along with previous day high, market is going. Now, this is the last swing high. When the last swing high is broken upside, you have market going up. Now, this is the last swing low, where if market has to trend, this level should be broken. Now, how do we mark this? On 15 minutes, we mark it as support and supply and demand. I have told you, you can call it a support and resistance or supply and demand. I showed you how things work. And this works in all the market, guys. How you can identify, because every swing high and swing low will act as a support and resistance. See here, market went down facing resistance. So identify, this is the gap down. This is the swing high, right? The first 5 minutes high. Now here, see how prices are reacting. Now you have about 20, you have S3 as buying zone. Along with that, some of you might be afraid, oh, I don't want to take trade. What if market goes down, etc., etc. This level will help you to go. And similarly, see, this is the last swing. Watch here. This comes down, goes up. This is this one I'm talking about. This candle. So you have a range of candles there. Now watch this. When this level is broken, see near that level, this is the last swing low. Not a big low, near that level, see how prices are reacting. 1, 2, 3, 4, 5. After that, when it's broken, market just went down. So once the last swing is broken, your direction should be downtrend until the same swing high is broken upside. See, it tried to pull up, then went down. The reason is the last swing high and swing low. You need to remember this way. Very simple, easy to understand. Do not complicate yourself too much. Very easy to understand. Now, this is another way. Whenever you have a jumbo candle, big gap down, I have told you, gap up, the first 5 minutes high or low. If it is gap up, low. If it is gap down, high. So this will be your swing high where price can reverse the direction. So then it comes down, goes up. Now this level is broken briefly, but you need to wait because this is the bigger, what do you call, candle. So always the big candle will act as very strong resistance and support area. So you need to use your imagination there. Got it. Now, if you see here, when market coming down, this was the, forget about this. This is the consolidation. This was the last swing high. Now, after this, market tried to stay above it, and the last 5 minutes pre-market took support on the same swing. I'll show you one more example. Yeah, this is the one. How the open candle can react, act. Market in an uptrend. Okay, this is also we have a good reason. See, higher low, higher low. Now, what is this higher low? This is like a double top. Now, this swing first is this one, higher low, higher low. This area will be your support area. If market buyers are in uptrend, they will try to defend this particular area. Once it tested, second time is tested, forming double top. See here, this is one, sorry, double bottom, W pattern. When market came back, same level was tested again. Remember, I have done this analysis, and also for educational purpose, I did call out if you want to buy in this area on this particular day. The reason is higher low, you have higher high, lower lows. Two higher highs, two lower lows qualifies to consider trend is in uptrend. And the last higher low means the last swing low should defend the territory, whatever trend. If it is an uptrend, the last swing low, this is in uptrend, so the last swing low is acting as support. Likewise, the next day market comes sharp, the first opening candle, see how it is acting as resistance. Same area, market just goes down. Here, this is the last swing high. Let's consider it comes down, swing high, two green candles. In the same area, when price pull back, you should not be afraid. You should be curious to see whether this area will be defended. And near that area, if it breaks, you have another scalping opportunity. Look, again, market pulls back, same area. The last swing high, you get another price action pattern where market goes down. Now you need to do this, back testing. Why back testing is needed is not to test it, because this is the assumption across the globe. The last swing high and last swing low act as a strong resistance in any trend. If that is broken, there is a high probability of trend reversal. I have shown you how to capture this trend reversal using these 15 minutes RSI. So watch that video if you have not seen, so that you can identify the trend reversal along with the RSI momentum and the last swing high. It might be 5 minutes and 15 minutes, but the trend reversal is on 15 minutes, but we are catching the swing high and swing low on 5 minutes. Do not get confused. Just back test on whatever script you're trading, so that you gain the confidence and you can stay calm to capture that many extra points on this particular day. Or if you have not taken a trade at all, it might give you an opportunity with price action to take the trade. Thank you all, guys. Have a good day. Please do share, subscribe. Love you all.